Very good evening to everyone tuning in. Welcome to the final part of a 5-part series titled A Brave New Wealth, organized by NUS Business School. So today we'll be discussing about what's in the future of cryptocurrency, upcoming trends and developments in this space, forecasts, predictions, opportunities, and everything about what the future holds for cryptocurrency. So today I'll be the moderator for this discussion. My name is Jing Jie, and I'm a final year undergraduate student in NUS Business School. And today we're very honored to be joined by Professor Duan Jin-Chuan, who is the Jardine Cycle and Carriage Professor of Finance and the Executive Director of the Asian Institute of Digital Finance at NUS. We are also very honored to be joined by Hsann Naing, MBA alumnus and Chief Operating Officer at a crypto exchange, Bitwell. Hsann also have extensive experience in blockchain, the financial services industry, and FX trading. So before his current role, he served as head of operations at Binance as well, which I'm sure everyone is also very familiar with. So without further ado, our speakers today have very kindly prepared a sharing for everyone tuning in today. So can we please have Professor Duan to share his slides first and kick us off?
Okay. So I assume you can see the slide, right? Okay. So, well, in 10 minutes to talk about future is quite a difficult task, but I'm going to give a try anyway. And let me first make it clear, it's my biased view. I expect people to challenge my view, and my view, of course, just my view, is not necessarily represent reality or the one with most insight. Anyway, let me give a try and hopefully you get something out of it. So a few background observation to help. First, what's a cryptocurrency? And many people have heard about it. The primary purpose being a currency is a medium of exchange, of course, and unit account. And secondary function, every time people talk about money, they talk about store of value. But that really is questionable in many ways, modern sort of financial world, because if you can earn return versus money, which is supposed to be zero, no return. So that is sort of different kind of ballgame. Anyway, issuing party can be private organization, community, or a sovereign, which means government essentially. And latter category, which is commonly referred to as a CBDC, central bank digital currency. So I think that's very important for everyone engaged in this kind of dialogue, should separate the private party issued the cryptocurrency versus central bank issued. Anyway, and let's not to mix up that cryptocurrency with a digital asset. Digital asset is something of intrinsic value, and we're just digitalizing the property right in essence. But really, as an economist, you can think about digital asset can be used as a sort of medium of exchange as well, basically serving as a bartering device. Anyway, let me continue with some background things. Cryptocurrency, in principle, have no credit risk. Why? Because it does not promise you anything. So there's no credit risk, right? Because nothing been promised, nothing to deliver. Okay, stable currency like a Tether or Diem, that's basically known as a Libra previously, actually have an inherent credit risk, and many people may not pay attention to that because they claim to index to something of value. If you claim to index, you may not be able to deliver. That is a credit risk, right? CBDC though are backed by sovereign. The trust we have in the issuing sovereign holds a key. If we don't have and the currency issued by sovereign, not necessarily trustworthy, right? Because there are so many countries and we have so many historical episodes. We know the fiat money are not necessarily reliable. It's basically whether the sovereign is reliable determine whether we should trust that currency. Anyway, digital asset need the custodian service to mitigate credit risk, because if you digitize something, but the underlying may not be there. So in other words, without custodian service, which we're going to face credit risk as well. So these are the kind of observation I have about the currency itself. And now we talk about technology. We all know permissionless blockchain technology based on mining are highly inefficient, leave a huge digital footprint, and it is functioning very slowly and consume enormous amount of electricity. So my personal view is beyond scientific experimentation. I really don't see the compelling reason to use them for cryptocurrency, actually. The CBDC, though, are very different because there is existing banking system to run on a trusted node blockchain, for instance. So it can be so much more efficient. Okay, and irony I do want to mention because this to me is quite important, and because I call it selling horse meat for beef steak, because trading of supposedly decentralized cryptocurrency are typically conducted on centralized exchange using accounts. That is quite weird, right? Because you want to decentralize something, and yet in order to trade efficiently, you actually use centralized exchange to do so. So these are a few observations I'd like you have. So now you want to listen to my view, right? My view is a digital currency are mostly Ponzi schemes. When I say digital currency, I'm referring to private party issued cryptocurrency. Okay, they're dressed in a very fancy technological thing, so they are able easily hype up and has appear to have a future. Okay, and Bitcoin, in my view, is a bubble, and stable coins are a pipe dream because they cannot be stable inherently. Okay, I can see money laundering has some real economic function served by Bitcoin and the like, but beyond that, I really don't see the real value of them. Okay, central bank digital currency are very different though. We start out with a shell and gradually, minted coin and paper currency. Does not mean the technology will stop there. Now we digitalize things. So I can see a natural progression of fiat currency, meaning issued by sovereigns, move into digital space. This is already happening. So it's not like a, prediction, wild prediction is happening. I'm arguing incentive instead of technology will determine their destiny. Okay, so if the mere fact now we're using centralized technology to trade the supposedly decentralized cryptos, it's already a test to my assertion. Right? Okay. Let me look at the fundamentals. Okay, I come to that conclusion is not baseless kind of conclusion. Right. So Bitcoin and the like are no match with conventional setup. Okay, in terms of transaction speed. And their prices versus, say, for instance, USD are too volatile to serve a transaction for transaction purpose. Why do you want to use it if value is so volatile? You lose all your profit, right? You lose so much as a transactional device. So it's not something you can count on. And here comes the stable currency. Why I'm saying so? Truly indexing stable currency, for instance, peg 1-to-1 USD, that basically require you set aside dollar for dollar or one crypto for one USD or whatever ratio deemed appropriate in a reserve at a custodian, which will make a little business sense to the issuing party, right? Because why do you want to do that? Well, why is the money to be made? And we know that it's incredibly difficult, right? Hong Kong pegged the US to USD, and Argentina used to peg to USD and failed. Okay, Hong Kong has a tremendous reserve there in order to support the Hong Kong dollar peg to USD. Anyway, so I don't see how that can be a businessly viable, okay, a stable currency. So it's more of a claim than a reality. Interest in cryptocurrency by major financial institutions quite often being used as proof crypto has gained mainstream status. I really don't buy that kind of argument. For instance, the Chicago Mercantile Exchange, okay, is trading futures and also options on Bitcoin and trading futures on Ethereum. Does this really mean this a good investment? I will argue not. So long as they are trading volume and their business, their profit to be made, and it will do it, and it will drop it anytime, and when they see no potential or no money to be made. And this is not even just an assertion, because the very first exchange introduced the Bitcoin futures is a Chicago Board of Option Exchange. That was in March 2020. It's in December 2017. And later they dropped. If you go back to read news, you will know the reason for dropping is because it doesn't have enough volume. So that's sort of proved my point in a way. Okay, so I would also argue as long as we need the states, means we need government, fiat currency will remain a sovereign power. Okay, sooner or later, private crypto will be curtailed by sovereign because that's the power of a state. And for the stability, for garden variety of reason, and state will not going to relinquish their power unless we don't need government. Okay, so sooner or later, in other words, a success will bring the downfall of cryptos as well. Even if some crypto can be justified, I don't know how, but if that's the case, the world does not need several hundred different kinds of cryptos as a medium of exchange. I think many travelers will agree with me. We already have too many fiat monies, right? Change from one currency to the other. I thought the euro was a great thing as a traveler because I no longer have to deal with, so many different currencies in Europe. So that I will argue serve as a fundamental reason. Really, many of these crypto are really just not going to survive, and I would say all of them going to have a difficulty, except the central bank issue one. Okay, so of course we can look at issue from statistical point of view as well, technical analysis. So if you look at the Bitcoins and from the inception all the way to the very recent September 15, annualized return is about 72%. It's very high, but the annualized volatility is very high, 75 some percent. Now suppose we take a post CBOE rollout of crypto futures as a gaining mainstream status. That's December 10, 2017 to now. And you see the annualized return already dropping. And the annualized volatility is still very high, stay up there. Okay. But by comparison, you look at Amazon, it's very similar. The other day I asked a few people, I say, did you think will you be surprised if Bitcoin dropped by 80% in 5 years? A lot of people say, yeah, I won't be surprised. But will you be surprised if Amazon dropped by 80% in next 5 years? He said, I will be totally surprised. This is not my reaction. I'm talking about number of individuals. I just did a very casual survey. Okay, so what I'm going to do is I'm going to show you the statistical result. Suppose we decompose crypto time series into, here is a Bitcoin, into fundamental value plus a transitional deviation, because we know in financial market transaction always take place, there's some sort of transaction momentum, which is not fundamental value, simply market mechanism and causing that. Anyway, suppose we do that, we do a very careful, sophisticated time series modeling analysis on this, and you will find something interesting too. Okay, here's a Bitcoin history all the way up, blue to the point. Suppose we use the model to predict the future. The red line is going to be, it's not a straight line, but it looks like it's straight line. The vertical scale is a log scale, so every tick is 100, is 10 times bigger. So, and it is in thousands. So we can see that it's 100,000 is somewhere there. And because the current value is about 4,000 something, 40 some thousand, sorry. And so you actually also at some time I plotted the confidence band of 95% confidence band. So you can see that it can go up to very, very high, even cross the $1 million range, I believe. And so, the sky is the limit. I suppose a lot of people talk about, crypto, in particular Bitcoin, has an unlimited future. I mean, suppose you believe in statistics, and that will be possibility. Of course, it can also drop like a stone to be, very low, at $10,000 easily if you go into the future. But this is not what I really want to say. What I really want to say, suppose from fundamental point of view, I, for instance, hold that view, and I think many people hold that view. 80% drop by Bitcoin over the next 5 years is very real possibility. And what future will look like, here is based on statistical analysis. Will be in that kind of trajectory, will be in that sort of band. So I don't mean this is going to be something future is going to be, prevail. But this is a statistical analysis. So let me sort of recap what I say. Basically, cryptocurrency, fundamentally, private party issue cryptocurrency, it's just very hard for me to justify or to think of a reason they should be there and for a long time. But I don't mean that the distributed ledger technology is no good. I just mean that the application of that kind of technology on a currency and of issue by private party somehow add on with basic economics. And the statistic analysis or technical analysis suggests and they are just highly speculative instrument, right? And if you follow the trend it have prevailed and into the future, it's going to be such a volatile or unpredictable investment. Okay, I think I'm going to just stop there. So my view is crypto's future is rather limited. Thank you.
Thank you, Professor, for that extremely insightful sharing and a really good summary and assessment of digital currencies. I'm sure the audience really took away a lot of insights and knowledge from that sharing. So may we now have Hsann to share his slides for our second sharing today?
Sure. Let me share my slide first. Yep. Okay. Yeah. So I got a different view about the cryptocurrency and what is currently in the market. So let me start. Okay. So what is happening now in the crypto? So basically, like crypto start as a payment normally. Yeah, as we all know that the Bitcoin start as the consensus payment approved. So previously, 3 to 5 years back, the every block transaction is so slow. So like 10 minutes. And the payment is really, really difficult to apply to this industry. However, currently, there's a lot of other chains and other technology involved, like Ethereum and then XRP, as sort of Phantom. A lot of technology involved, and then this block transaction time are shorter, like 1 second. Now, we are closer to the payment for the Bitcoin by transferring either Bitcoin, Ethereum, or either stablecoin. So transition of the payment as a user to user is kind of possible right now, but it's kind of a lot of regulatory pressures. So apart from the payment, right, what's happening next is DeFi. It's a pretty hot area that we are facing right now, which is a decentralized finance. Here, you can see a few projects like Uniswap, Curve, and then Wi-Fi and Farm. So these projects are like based on the Ethereum layer 2 solution, and then we have a smart contract to start with the borrowing and lending, which currently is the bank is doing. So what bank is doing, like use our money to lend to the other users, and then they are getting the interest. In the DeFi, we can lend our own assets to the other users while we are earning the own interest. So that's a very basic of DeFi, and if we can explore into a DeFi, there's a lot of more interesting stuff over there. Other than that, in the DeFi, then we are slowly move to the NFT space as well. So these NFT is a CryptoPunks, and these few months, the CryptoPunks are really, really hot, and then each one of the figure is probably the minimum is around 100 Ether. So these pixelated JPEG are what 100 Ether for each, and no one able to tell it why the CryptoPunks are so valuable. And then this is a start of another industry called NFTs probably. And then we are in another highly circulated as well. So with the NFT evolve, right? So we are going to another space called GameFi. So previously we got a card games and another game. So NFTs serve as one of your assets or your game equipments or your armor, your kind of playing in the game, in-game equipments. So these are become a tradable. And some of the project like Axie Infinity, they are come up with a kind of play to earn model, which is pretty popular in the Philippines, and making a kind of a decent income for a lot of people in the Philippines, and then a lot of Filipinos, and then even for some shops are start accepting the in-game token called SLP as a payment. So this is one of the evolving area as well. The last one is a wallet. In order to do all these kind of payment, DeFi, GameFi, or NFTs, right, we all need a wallet. Currently, the crypto wallets are kind of, I would say, not very user-friendly. And then it's not easy to use as our day-to-day wallet. And crypto wallet have a lot of limitation as well. If you lost a private key, then all the assets are gone, and those kind of thing. As well as we need to use a DeFi to use a wallet. So wallet usage are very, very complicated, but all the wallet makers are start understanding these are their limitations, and then they are try to improve the wallet features, and then these are what happening in the crypto, right? So for the future, so I will say for each part, payment is a kind of we are seeing the stricter regulations. It is pretty healthy for the industry, and improving the consumer confidence. So if the regulator kick in, then we are seeing that it giving the consumer confidence, and then we can basically trust this party. A lot of restrictions are imposed on the payment, and in Singapore, in the US as well. We are seeing a high adoption rate as well, like Elsevier accept Bitcoin as a legal tender. So this is one of the improvements that we are seeing in the world, what is happening for the Bitcoin adoptions. And institute investing, so MicroStrategy and Tesla and Square, they bought a lot of Bitcoins, and then they put it aside as an investment. Another thing for the payment, just as I already said that faster block transaction time is closer to become daily usable payment solutions for the Bitcoin and those kind of tokens. Maybe not a Bitcoin, but we can use a stablecoin as a payment. So for the DeFi, right? DeFi is in its early stage. It is like 2 years old. And we will see a lot of innovations in this area. And we currently seeing that a lot of more innovative product on the DeFi landscape. But the drawback is like it is highly speculative, volatile, and even have a smart contract risk. We can see a lot of hackers are hacking one project, and then the users are losing millions of dollars. And then definitely it's a high risk, high gain industry, and we definitely need to be careful about what we are doing, and we need to know what we are really doing. And apart from that, DeFi is most likely to disrupt the traditional financial industry in the future with the decentralized nature. And I'm not sure whether a regulator will kick into this space and try to regulate it, because it's highly speculative right now. Union DeFi, what's a kind of return is like, well, the bank interest rate are approximately 0 at the moment, and then Coinbase wallet is service offering like 4% per annum for the stablecoin, that USDC, and a user can probably get more than 12% on the DeFi platform. But as we all know, do your own research before investing. We need to know what we are doing before we do a research, invest. Another thing is the NFT and GameFi. So this CryptoPunk, I just checked it 2 days back. This sold at 100 ETH, and then exactly when you go into the wallet, you will see this picture, and then we are back. Someone is paying the 100 Ethereum, like 200K USD for this JPEG. Currently, mainstream use for is a digital art and collectibles, but there are a few other use cases such as sports, reward, assets. Then they are start using it, and then we can see that NBA Top Shot is one of the examples for the sport in this NFTs stuff, and then CryptoPunks is another area, and we also have Loot, which is a kind of a text NFT, and it is kind of transact at a very, very high price. Another thing is like with this NFT, we got a play to earn model, which is a GameFi, another emerging area, and this will be the next wave for the GameFi NFT that we are seeing. For the crypto wallet, it is expected to more and more advanced wallet to emerge, and probably it will become part of our daily lives. And for the payment, NFT storage, and currently in some of the wallet, I will know what I have in my wallet, but I will not see this picture. And then I only see a string of text, and those should be able to display correctly in the order of the wallets, so that users are able to know that this crypto wallet is their mini bank. And in a Coinbase wallet, right, if I have additional tokens like stablecoins and other tokens or Bitcoin, Ethereum, I can just stake it, and then I can just earning the interest while I put those tokens in my wallet and then custody under the Coinbase wallet. So those are the kind of become our day-to-day mini bank. If we do not want to use a token yet, and we probably want to put in the staking pool, and then we gotta earning the interest, which is currently higher than what the fiat and then bank offering interest. Last is like wallet are not user friendly at all. Only the basic functions. They have a storage and then send and receive of those things. And this is more Fox is MetaMask. They can interact with a smart contract at the moment, so we can send transition to the smart contract on the Ethereum and the other layer 2 applications, EVM blockchains. Last but not least, regulations. So regulators are really start looking into the crypto space as well. We are seeing that a lot of countries set rules and regulations for cryptocurrency in the US, UK, EU, SG, and many more. And then Germany is like, they have their own set of rules and regulation. Singapore, for example, we have a PSA license. It's needed if we want to serve the crypto user. And we can see that DBS is offering the crypto investment as well. But it's a closed loop system. This is a good sign for basically it's a cryptocurrency adoption, and hopefully we can trade freely or pay with a cryptocurrency in the future. I do agree with the view that cryptocurrency has a lot of drawbacks like scamming and then AML issues. These are the really issue that we are trying to resolve. For the AML and dark web, we have a kind of a tools called chain analysis and elliptic. These tools are basically trying to building up the database for those kind of dirty addresses, and then if we have a Bitcoin coming out from those addresses, we can track them back and basically controlling for the AML, which is the same as what the central bank and most of the bank is doing. If this address is going to some blacklisted address or the country and a high risk country, then they have a kind of risk assessment for those kind of cryptocurrency as well. This is one of the part that regulatories are forced into it, and then we also seeing that this area of the analytic tools as well as the database for the dark web are growing, and people like us are trying to prevent it from that, and so that a lot of consumers are able to trade or use a cryptocurrency safely and in the near future. And that's all about it, and thank you for listening.
Okay, thank you, Hsann, for that incredible sharing. I think we can see that both panelists have some similar views and also some differing views. And I think that's perfectly fine, not just in cryptocurrencies, but everything in general as well. And that's something that we constantly encourage here at NUS Business School as well, to constantly challenge different viewpoints so that we can all learn better, right? So anyway, I think now it is a good time for us to move into the Q&A segment. So for our audience tuning in at home or anywhere else, anyone who has any questions, please feel free to leave it in the comments, and we'll try our best to go through your questions as much as we can. So maybe we can start with the first question from Facebook by Marie Anthony. She asks, I wonder what is the regulatory landscape of cryptocurrency and the risk of trading? BitMEX was charged by US Department of Justice, and will this happen to other exchanges? Anyone wants to take this question?
Yeah, sure. Yeah, that's correct. BitMEX was charged, and what we are knowing is like BitMEX was basically they do not have a license in the US, and then they are basically serving the US citizens and US residents. Apart from that, their exchange volumes too huge, and then let the regulatory trying to catch them up. But in the US, right, there's a lot of another exchange called LedgerX, which is a kind of a licensed future exchange. Basically, regulatory wants to see all these exchanges are regulated, and then proper KYC and compliance properly complies to the country rules and regulations. In that case, right, all the users are protected, and then there's no basically avoiding those kind of insider tradings as well. This is a kind of early error in the Wall Street as well. We do not have a set of rules, but later on, the regulator implement a lot of rules and regulations to prevent those kind of front running and insider trading. That is, I can see that is coming to the crypto exchange as well. It's really the same as a kind of a financial instruments, and then what we are doing as an exchange is the same. The trading, how do we make sure we comply to the local rules and regulations as well? Yep.
Prof, do you have anything to add on this?
Yeah, I think well, yes. You know, I think regulation is it should be rightly implemented, right? Because financial products are financial products, right? And so they have to be regulated to give a level playing field. I think what happened is because I earlier mentioned about dressing technology clothing. And I was a regulator or policymaker in general are very reluctant to stifle innovation. They want to give them a chance. In particular, when they are very small, they will not upset the system very much, right? So basically, financial regulation is a typical financial regulation is run under two pillars, conceptual pillar. One is a financial stability, to assist stability. The other one to protect small investor and consumer. So if neither become an issue, there is no need to regulate. In other words, this crypto activity is very minor, and it's also a couple with the technology. So let's give them a chance. I think that's a mindset. That's why earlier I mentioned sooner or later, sovereign will step in, because either they become so big they can be potential upset the financial stability, or they can create problem for consumers and investors, right? So it's their duty to act. I think they are already acting too slowly because they are afraid to be accused. Okay, but all eyes are watching, right? That's very clear. I do want to take this opportunity to clarify one thing. Hsann earlier mentioned a lot of cases. I think it's important to separate something of a real value, something which is just a currency, because in many cases he mentioned they are actually a digital asset, right? Because if I have a real business proposal, like I create a payment system, the payment system does not need to be a currency, it can be just a business, right?
That's right.
Right. So that itself, we can have a claim to the asset, right? That kind of currency really is not currency. There should be as digital shares of the operation. So I think
That's right.
That's been misused or mixed, unfortunately. In other words, many cases you mentioned, and they are promising businesses, okay? And they may turn out to be very good business proposition down the road, but they need not be currencies. Okay, many internal operation, they create token that are, in my view, are transactional token. They are not currencies. Right? They need not be currency. And that just the thing has become so weird now, right? Because the people sort of see opportunity. In some sense, they purposely try to mix things up so to gain advantage, right? That we know how business typically done. So I hope that little things help to clarify some situation. Okay.
Mm-hmm.
Great. So I think that was very well addressed, this question. So we have another question from LinkedIn by Joseph Tan. He says, hi, do you foresee banks building the infrastructure to support trading of cryptocurrencies? And also following China's draconian stance on cryptocurrencies, do you see other countries following suit? Does anyone want to take this question first?
I can try. Banks are already doing it, right? For instance, DBS as an example. I would say when it's a profit we make, trading on something so long as illegal, banks will do because it's a business. This bank are not doing it, the other bank will do. Okay, But we have to be very mindful of this, though. We trade USD versus against the Sing dollars. We trade yen against euro. All these things, because their existence are part of this legal system of sovereign control, sovereign support system. And because there are legal tenders, go to some country, you cannot trade or to conduct business without using that currency by law, right? So we have a multiple currency in existence. So currency need to be traded, but people don't buy currency, just sit on it. They buy currency, they put in the bonds. Now these days, because interest rate is so low, we don't notice the difference. But in old days, you do know the difference. When U.S. Treasury bill hit the 18%, 19%, you know it's make a huge difference. So you actually do not invest in USD. You invest in USD denominated investment bonds, right? That's the way one should understand investment. So trading currency, it has to be a reason. I get another currency to buy something, to buy either commodity or buy financial asset, right? That's how currency are being used as a medium exchange. I think I earlier also say store of value for money. That's old saying, it's old economist, old style, because keeping the money, you don't store money, store value in money. You store the value in its financial form, it's investment. Okay, so still going back to my original point, is why do we need these currencies? I think we can have a digital asset, digital shares for business proposition. They are held in some form. Anyway, everything is electronic anyway, right, these days. It could be digital or digitized, right, or electronic form. So I don't see why bank won't trade. Not necessarily they should in existence. I mentioned CBOE already, right? CBOE trade futures, Bitcoin futures, first one. And just no business, they drop. And if you read the news now, these days, they're thinking about coming back. It's just kind of, you bring this product, you drop this product, you bring the product back again, depend on market needs. So banks signal to trade or act to trade does not mean anything to me, right? They are market makers. Middleman or middle person always do business if there are two sides to it. I hope I answered that question by in such a long-winded that this discussion.
Thank you, Prof. Hsann, do you have anything for this?
Yeah, so basically I do agree with Prof on those kind of bank solely supporting. Yeah, the landscape is changing actually. So in 2 years back when I first flew to Jersey Island, because at the point of time UK doesn't support a cryptocurrency yet. So only the Jersey Island is supporting pounds and euro, and then they go give us a license to opening the exchange with the fiat currency, right? At the 2018, there's situations like this, and banks treat cryptocurrencies like a kind of really dirty money, and then it's very high risk. So they do not want to touch it because of a lot of AML issue. In the Singapore banks, if they know about I'm doing the crypto, they won't give me the bank account for my company at the point of time. So at the point of time is we got a one MDB issue as well. But banks are really careful by giving that. Currently a little bit more open up for the DBS case, but they do not let the one thing different for the DBS trading part is they do not let the user to send their crypto to the DBS banking system. So it's most likely will be a closed loop system. So like you can buy from the user fiat currency to buy from DBS, and then you cash out over there. You are not going to transfer your Bitcoin to your own wallet. So DBS will act as a custody as well as an exchange. So that's a little bit safer for the bank to add. So this kind of trading policy will be become more and more later, I believe, for each bank, and then they will become like intrabank is like more on the forex. So forex is working as the same, right? So they have each bank have their own different sets of account, and then they end of the day they will just settle their foreign currency reserve each other, right? So they basically the bank will have a demand and a supply with the other banks, so they can have a closed loop between the banks to have those kind of trading legally. So the answer is yes. The more money we will going to see more and more trading within the banks, and more legal exchange will be coming up. In Asia, Korea is issuing the license. Malaysia have 3 legal exchanges. Philippines is coming up. Japan already have trading for crypto for quite a long time. UK is coming out with the new regulatory regulations. US, a lot of states are accepting the crypto. So it's the whole is coming. Apart from that, the China is like a totally different case. They are cracking really, really hard to the crypto, and some of the country may follow as well. So it's a kind of 2 different sides of the coin, right? If the country see it is a threat to the their economy, then definitely they will crack it out. Those kind of control currency country may have those kind of issue more or less more than those kind of freely trade currency like US or JPY. Thank you.
Now, this is closed loop. Let me just add a bit. This closed loop trading, that's what I mentioned earlier, is a trading based on accounts. But remember, cryptocurrency is meant to be decentralized. Don't have to have any intermediary. So that's why I was saying it's irony, right? It's selling horse meat for beef steak.
Yeah, exactly.
Okay.
Yeah.
But the need to trade, if I think something, I want to benchmark to something, it's almost like a paper gold. You buy paper gold, you don't necessarily have a gold, right? If someone say you have a gold. And that's how the financial world is functioning now. And it will continue to be the case. That's what I think. So that's why I feel very strongly we actually do not need this currency, right? We need what is a crypto asset. They have some fundamental intrinsic value. Even asset, they can be speculative, but at least something they can may lend some value at some point, right? Okay, that again. I just want to illustrate the point. All the trading we see today, majority of them are not real wallet, right? They are accounts. You deal with an intermediary, and because for various reasons, maybe for legal reasons, like I mentioned, banks, right? And then they are also for business reason. Why do you want to allow other people to trade directly, not through you? Through you is a way to make money, right? So there's an incentive issue, right? Real incentive.
I actually got a different view on that actually. So like a DBS is a closed loop. So what user can do is like they only can go in with a fiat, then come out with a fiat, right? So I will never have my Bitcoin to sell on the DBS because I cannot deposit. But on the other wall of the exchanges, right, like Binance or let's say Coinbase, right, user can use their Bitcoin to sell on the exchange. They can cash it out. So that's the real value of the exchanges there. While DBS closed loop is like user to speculate using your current fiat money, go into the market, and then you come out with an exit the market. So like a normal trading, you trade stocks, right? So if I'm the miner, this kind of trading system is kind of less value than compared to if I go to the Coinbase. So that I mine 1 Bitcoin and then I can cash out, and then so that I can actually buy my physical assets that I need for now. If a lot of people start stepping the Bitcoin, like a few months back, Tesla back and forth, so I can use directly with my Bitcoin. I may not need an exchange as well.
I think some great points are raised by both our panelists today. Maybe we can move on to the next question. We have one question coming from Facebook by Olia. She asks, if our account is hacked, should we create a new account, or will our data, is it not safe to create it again?
Oh, that's an interesting question. Yeah, so let me try. So a little bit vague in this question. So if it is a kind of exchange account, right? So normally exchange account is basically you have a username and password, and then you probably will have a 2FA, and for the Google Authenticator, either SMS authentication or the Google Authenticator. If the account is hacked, right? Normally most of the experience is that your money is gone. So the hacker will just withdraw your whatever assets to their wallet, and then they run away. So and it is happening on blockchain. Most of the time, you cannot get it back. If that kind of account, right? If your account is hacked, then you just change your password, and then you just do the normal computer security, like save your password as well as the Google Authenticator is changed. That will save you. But if you are talking about a wallet, your private key, then please do not reuse it, and then create a new wallet, and then so that the hacker already have your private key and then always can get your tokens. You cannot change your private key, so create a new wallet. So two different scenarios.
Let me also add a little bit. I think there's an advantage of having an account with a financial institution. I think there are two reasons. For instance, some accident happen, you lose something, you can recover, right? And the other one, like for instance, estate, someone passed away, and then all of a sudden it's gone, disappearing, right? Disappear.
Yes.
If it is with a financial institution, this can be recovered through legal process of inheritance. So I actually think, that's why I keep on saying this, let's think about this issue. Don't just from the pure technological point of view. Human being has this innate need. We cannot take care of ourselves very well, in fact, right? If we are vigilant today, and tomorrow we may be sort of too lax and creating a problem. And the financial institutions are there to serve us, and therefore they charge us something, right? So I think we cannot do without that. We count on institution and the faith in institution, confidence in institution. Okay.
Totally agree on that. Without a bank or those kind of financial institution, we are not able to move forward, because we still need to exit to our daily usage of cash and the fiat currency.
Yep. So, Olia, hopefully that answers your question. Thank you for the question. We'll move on to the next question by Jeremy on Facebook. So he mentioned that Gary Gensler, the chairman of the US Securities and Exchange Commission, made a few comments about crypto this morning. So how do you think crypto will redefine? Do you think crypto will redefine how the SEC regulates securities? And do you think Bitcoin and alternative coins will be treated with the same lens?
Let me try this out. So SEC basically have a set of rules to define a crypto as a securities based on the usage normally. So if for example, if a token is issued the same as the project shares, so this is going to be a security rather than normal cryptocurrency, right? This kind of you are setting up a startup, and then you issue the shares at the beginning, and then you are trying to burn it, and then basically it's a kind of buyback shares, and then try to make the share price going up, sort of maintaining the price. So actually, those kind of there's a set of rules that SEC has set to whether the token is listed is a whether security or not. At the current point, right? Bitcoin is not treated as a security, and a few other tokens are not treated as a securities. They are able to list it on the exchanges, and the exchange need to go through thorough compliance as well as the screening process to make sure these are not the securities. If it is a securities, they need to go to a security exchange, right? So these are kind of financial instruments already. So there's a set of rules that set by US government, and so if the Coinbase is going to list it, then those tokens are not treated as a security for now, and then Coinbase already scanned it out. And
most ICO, I think I earlier alluded to, most ICO actually should be viewed as IPO. So if IPO are supposed to be regulated, heavily regulated, and ICO must be regulated. But Bitcoin is an interesting case in point. Bitcoin has not promised you anything. So therefore, how can it be a security? Okay.
Yep.
So if it is not security, SEC in US has no jurisdiction. It's a money, right? So in other words, I think that people are sort of just navigating or, try to sort of wiggle their way through all these cracks in regulation. I think once we have a concept straight, and then this matter become very easy. And the digitalization is only a form. does not change the substance. Not because the technology changes substance, right? It's an economic or political substance remain the same. So let's once have a line, it's very clearly drawn. Security is about something being promised. The other one is something is not being promised. It's a currency. Currency by definition is illegal, right? Because there's fiat money. It's a sovereign power. So some of this money can only to a point viewed as almost like casino chips, not complementary currency. You see my point? And so that the limited circulation is allowed, right? Wide circulation is actually against the law in most countries. Right? So now you say it's currency, it's not currency, it's a security, it's not security. I think people are just taking advantage of both sides. And it's not very healthy, actually. It's not healthy just from legal point of view. It's not healthy in terms of economic development.
Right. I think great question by Jeremy. Hopefully we answered your question. And due to the with the interest of time, I think we'll take one final question. Let's take it from LinkedIn. I think a very good question by Amanda. So she asks, blockchain technology could possibly disrupt the banking industry by disintermediating the key services that banks provide. Do you foresee cryptocurrencies and traditional banking coexisting, and how so? Hold on, let's.
Okay, let me give it a try. What happened is cryptocurrency. Is it a currency? I think if you mean currency, I have a different view. Okay, if it is crypto asset, bank for sure it will be dealing with, right? Because just like any kind of financial asset. Now, if it's just a currency, I think there's a limited future anyway. Okay, so it's not going to be major currency sooner or later. Even now, it's popular. Somewhere down the road, it will be disappearing. So I don't think that will be a structural issue. Okay, for all institutions, they are adapting to. Because for them, it could be business opportunity or could be missed business opportunity, right? Okay, so on that, in that regard, we have to really sort of be clear about what we're talking about. Are we really talking about crypto for something else, digitalizing something of value versus just the currency? Because the regulation will be tightened up, and sovereign will step in. I was sooner or later will rule out those so-called cryptocurrency, true currency, okay, not digitalized asset, and we just changed the form of ownership, right? From in the old days, paper to electronic records could also be in some other form or record keeping, basically. So of course, will coexist in terms of technology, because whatever it prevails is because it has economic advantage, cheaper way of doing it. Okay, I can see the introduction of a crypto in general put a tremendous pressure on existing banking system. For instance, all this new payment way, put the traditional bank, push them into sort of making themselves more efficient, lower the cost, right? Because now you can wire money overseas, so basically with no cost, right? It was not possible because the banking system will not react unless there is a real pressure. So this technology actually does something good for the society because they exert pressure on the existing system to make them more competitive. So I see that as a positive development. So I personally view Bitcoin as a big social experiment. In the end, it's a big cost society had to pay for it. But that's how we educate ourselves, advancing from one state to the other state. It's a social cost we have to bear.
Thank you, Prof. What about Hsann?
Yeah, for the first question, like blockchain as a technology is really possible to disrupt the banking industry. Like bank already start doing they're on a private blockchain to trying to use that. They will not be go for the public blockchain, and then because a lot of issues with the privacy, etc., and then those kind of transitions are not suitable for the public blockchain. But technology itself, it will be very, very useful for the bank to start adopting it. We can see the China is adopting those kind of blockchain for the currency itself. So basically, they are using on their private net. Technology itself has no issue. Either we are using at the private level or the public level. So it will be using as a private level for the banks and institutions. So another thing is that cryptocurrency and traditional banking coexist. So since they are using the private blockchain and as a use case, and the rest of the cryptocurrency like Bitcoin and Ethereum, they are on a public blockchain. They definitely will be coexist, but these two are kind of not able to compare together. It's a kind of an apple and an orange at the moment. And banks are really regulated and then by country levels and then global levels, while a lot of currencies are like kind of decentralized in the nature, and then the value they have is more on the speculative as well as a consensus value that we believe, and then most of the Bitcoin people will believe that they will be going to a hype, and then definitely we have a different view from the different people. But we still believe in that this are kind of socially benefit to everyone, and kind of consensus value is getting more and more acceptable from the people across the world.
Right. Thank you, Amanda, for the question. Hope that answers your question. So sadly, we've run out of time, so we are not able to complete the questions. But thank you, everybody, for tuning in to the final part of a 5-part series, A Brave New Wealth, organized by NUS Business School. So for anyone who has missed any parts of the sharing, you can always watch the playback. And also do remember to follow us on our social media pages on Facebook, LinkedIn, and YouTube for more exciting updates and programs that we have in store. So once again, thank you to our speakers, Professor Duan Jin-Chuan and Hsann, Aung, Naing, for taking the time out to be here with us today and spreading an immense amount of knowledge to everyone tuning in. So thank you, everyone. It's been a pleasure, and take care.
Thank you.
Yeah.